So Josh, I'd love to start with strategy. I mean, strategy is a very unique role for a developer to hold. What does strategy look like for you and for Skanska?
It's a great question, and my role, I think, when they put together the job description and then ultimately got hired, it had probably was one of the most broadly defined elements. It kind of said, well, you kind of listed out the real estate development industry here. I think it printed over 5 pages, and I'm not kidding about that.
So do everything essentially.
Well, or advise or help, right?
Yes,
Right.
yes.
Talk about a lot, do nothing at the end of the day, right? As
Yeah.
sort of sometimes the world goes. My main role, and actually now that you upgraded my title to investment strategies, I basically serve as a head of research and strategy for Skanska's development operations here in the United States, and we build multifamily and office, generally high-rise, complex properties in urban environments, and we're active in Boston, D.C., Northern Virginia, Houston, Seattle, and L.A. So I kind of help oversee, obviously, a lot of the investment analytics, market analytics, help make driving decisions, and also do all of our corporate strategy planning and kind of all that kind of internal stuff that comes as part of being a multinational corporation. It does also include a lot of reviewing of technology and elements and things that go into our buildings, into our processes. So it does have kind of a wide-ranging effect. So I get to kind of oversee and help to advise our senior leaders in the company on big decisions and moves we're going to make.
Yeah, that's awesome. And then I imagine you use a ton of data as well. What are your thoughts on data, where that's going as well?
It's a very interesting question. I know, and tomorrow we have our panel. We're going to deep dive into some of this.
Diving further. So brief
talking about data.
overview
Yeah,
for
but
now.
it's my background. Before I joined Skanska, I was a professor at New York University. I've got a background in kind of real estate economics, PhD in finance. So I come from a very, deep level of sort of use of data, research, using it. And it's funny. Everyone talks about AI, machine learning. These are all kind of some of the hot phrases. In my time, it was just econometrics, right, or statistics. But now we've upgraded it, and how different it is, we could argue. But the thing about real estate and data is that, compared to practically any other field or business, we actually have maybe extremely low adaption or use of data. In the stock market, anything financial, right, there's 1 million transactions, everything gets recorded into some centralized ledger place, and people can research it, mine it. If you buy anything on Amazon, it is scary what they know about us. But frankly, when it comes to real estate, the amount of data that actually gets captured or in any place that is mineable in any real estate transaction, especially leasing, even in sales transactions or even large commercial sales transaction, is really low, and it happens a lot more infrequently. So for us, it's a matter of where can we get new information, how can we find out what's going to happen next. I always like to say one of the greatest things, if you can figure out what the next city or next area that's going to be like Denver, but figure that out, 5 or 10 years before it is, you can do really well. So that's kind of the ultimate goal of where we think we can get to and trying to go with data.
And do you feel like the industry, not there yet, but when Skanska comes to you and your team, they say, okay, we're looking to build a new site in LA, which I know you're very active in. Do you feel prepared that you have the data at your fingertips to really make that judgment call?
Boy, that's an interesting question. In some ways, you feel almost bombarded. In the sense that, and we obviously subscribe to a lot of the major kind of traditional data sources, CoStar, Reis, Real Capital Analytics. We also have access to a very large network of brokers. I mean, every, be it investment sales or leasing brokers, if it's an office building, right, they are there at our beck and call to provide everything that they have from their in-house sources and everything else. We also experiment with sort of the unique data sources, like some that use social media data. Yet at the same time, as you're looking at all of this, it's like, do you actually have what's going to really empower your decision? Generally, no. You have to take a lot of pieces that they get close enough, or they get a few feet away, and you have to make your interpolation. I do think that as geocoding and sort of just sort of understanding that everything has an address, and then tagging activities that have 2 addresses, which is kind of the first step to anything in real estate data world. As that goes further and further, there will be a lot more insights there. But are we there yet? No, we are still in maybe the second inning of this game.
Yeah. Yeah. Well, Skanska is an international company as well. Are you finding that you're pulling strategies from other, maybe European countries and things like that?
So our business unit is the U.S.-centric one. So we have sister business units in the Nordics and in Central Europe, also the U.K. that does something similar. And we do get together as a group. But, it's interesting, even how we share ideas internally isn't the easiest thing in the world, right?
Yeah.
I mean, generally everyone speaks English, but even a simple, you add a simple language barrier, which obviously they say English is a business language universal, but it's not. I mean, everyone has their own, and then you add cultural differences, everything else. You'll find out these systems don't talk very well.
Yeah.
I mean, it is interesting. I'll read a press release that goes out about our deal, and look, and now I know how many square meters our building sold in, right? That's something we,
Yeah.
there's such a lack of standardization
Yeah.
at the base level of real estate that obviously to then get to a data point, that's another, I think for anybody who's in the vendor world out there, that's a unique challenge. You have to sort of maybe realize you're walking into a non-standardized operation.
Yeah, that's interesting. And I mean, you guys are, we can talk about this from the national perspective, international perspective, from your colleagues. What about, a smaller local firm? How do you think that your decisions that you're having to make compares to a smaller, 10,000 portfolio, portfolio?
I mean, if you're a smaller regional firm, or depending on you might get a luxury in that you've decided, or just by practicalities, that your sandbox is these couple of markets or the state or whatever it is, and to some extent, you get to know your backyard better. I mean, so
Yeah.
in my perspective, where I have to kind of cover a nationwide thing, I have to factor that there's cities that I need to kind of have an opinion on that I may have visited once, if ever.
Yeah.
So that's a personal thing. Now, obviously, our local teams, because we still take a local home market approach. So, I mean, my Boston team knows everything about what's going on in the Boston market, right? So there's that. So when you're a smaller company, I do think you get a little bit of a luxury that you can kind of know your backyard.
Yeah.
But what I've learned, and this is when in my prior consulting life before joining Skanska, when I sometimes actually it was mostly here in Florida. It always amazes me. Sometimes it would take maybe a braver, I hate to use the word smarter because I think that's giving too much credit, but it took an out-of-towner sometimes to realize a lot of value there, right? The locals just skip right over this thing, not sort of seeing it, because they just, it's in your backyard. You get familiar. You're like, oh, that place, now that'll never happen.
Yeah.
And somebody comes in, from New York or whatever, buys, and you're like, wow, look how much money they made, and what a cool project.
Yeah.
Well, it's been sitting in front of you for a decade, but, it took somebody else to figure it out. So you gotta, it cuts both ways.
Yeah. And what does that process often look like if, you have somebody, I know my city, I know my market, and your team comes in with data and says, okay, wait, maybe we're not 100% right about that. What does that look like?
Well, it's an interesting thing, because I think prior beliefs, right, this is a big thing in the field of economic research, right? Because what you believe, or what you essentially there's something called anchoring biases. There's a bunch of different cognitive biases.
Yeah.
And the problem that we're probably making a lot of decisions in our lives, and certainly in our businesses, and certainly in real estate, that we just think, well, this works. Like, why if I were to ask a question to anybody here, I know this is the multifamily type track, right? So why do you have your ratio of studios to 1 bedrooms to 2 bedrooms that you've selected, right? And I'll go ahead and tell you, I'm not going to suggest that this is necessarily what the Skanska teams do, but I think a lot of people say, well, I mean, it kind of fits. That's what the architect, this is what I feel like they'll say. I think that's what the market wants.
Yeah.
And if I asked you to prove it, you get to, well, I mean, we did this other project and it worked out, at least.
Yeah.
Do you actually know that you optimize the rent structure and that you actually maximize the NOI that would have come off that property, given what the market is doing, or where you think it'll be, and over stabilize? And I would venture to say a lot of people would actually, if you really were to force them to prove out their theses, they would just sort of point to what's called historical data, which may not actually represent, and a lot of it is internal biases of what they think works. Yeah. And at the end of the day, you just blame your architect because that's what they drew. But I mean, but at the same point, that's a good example, I think, of a case where people make a lot of decisions, and sometimes the data could be. You might be shocked to know that there's actually more and more families that 3 bedrooms might rent pretty well.
Yeah.
You look at what's happening with single-family rentals, right?
Yeah.
I mean, there's a reason why those houses are being bought, and it's in part because no apartment developer builds 3 bedrooms anymore.
Yeah, I spent 2 months in Berlin this summer, and everyone lived in an apartment, but they had 3-bedroom units, and it was really, really cool to see. But you don't see that in the States.
And all the apartment developers say, well, what about rent per square foot? Yeah, well, you're right. But nobody rents per square foot. That's only something apartment people talk about.
Yeah, exactly. lost my train of thought, but in terms of looking at this data and maybe historical data, a lot of what we thought we knew about the world and market dynamics has changed in the past year. How much historical data do you think is, still accurate, and how much can we potentially fall back on?
Well, that's a really interesting question. Right now, I think the thing that a lot of us are doing, certainly if you read sort of data, contemporary commentary about the market, there's this right now a very big, let's compare everything now to pre-pandemic, which for lack of a better term, it goes to the year end 2019.
Yeah.
Why that's a relevant comparison, I don't know, to be quite honest with you. It's just other than, 2019 is our last normal period, right? That's our last year of full year normalcy. 2020, we just kind of want to forget about 2021, where, look, here in Florida, you can argue they've had a fairly normal year by some standards, but still quite not in a lot of other ways. I could show you other places where you really can't even, like some downtowns have barely returned. I think that going forward, you have to be very cognizant that you're making decisions that are truly forward-looking. And historical data and historical trend following can have a lot of value, but it can be really, really dangerous. I'll give you a really fast example that this one always gets me, market cycles and timing. I started getting into this whole real estate economist racket after '08 because I was kind of working in investment banking world and it kind of fell apart. That's when I got my PhD. And basically that was the '08 downturn was just I was in Florida. It was a very personal thing for me. So I'm sure everyone who was in business before that has some other story. If you got into business after '08, you have no idea a little bit, it's just hate to say this. Every time I go out and speak, especially starting as early as, I want to say 2014, maybe even 13, people ask, well, when's the next crash? It's going to happen this year. It's going to happen this year. Then I got to say, well, don't they happen every 7 years? Don't they happen every 8 years? And I'm like, nothing about this period is like that period of '06, '07 that led into it. So everyone's making this because they knew about '08. They're making a comparison that's going to be like '08.
Yeah.
So we're watching, even as we go through cyclic activity now, and the pandemic kind of triggered some of it. It didn't happen anything like '08. Now, to me, that was the most obvious thing in the world, that it wasn't going to be like '08, because the supply-demand dynamics were completely different.
Yeah.
Even the capital market structure was completely different.
Yeah.
For good reasons, actually, on that one. But people yet, in so many minds, were starting to compare in 2020. The minute COVID hit was, well, how is this going to be compared to '08? And everyone started doing this because it's the closest thing in memory, right? It's the shortest synapse in your brain to make the connection.
Yeah, it's interesting. Slight tangent. I don't know if anybody's read Michelle Obama's autobiography, but she has this phrase called, somebody asked her in an interview, after the presidency, how do you find yourself just getting back on track, just to your normal life? And she said, well, I will never not be the former first lady. My life will never be the same. You find new tracks, and I almost think that that's what we need to do with real estate data moving forward. Is there's no comparison to this time. We need to find the current data sets and move forward from there. So,
that's an interesting point. I wasn't sure you were going to go to data, but I was actually thinking, like, that's how I think people are thinking about the pandemic, right? Like, we'll never live in a world where we know that this can't happen. This is a black swan type concept, right? If anyone, who's ever, I know, get a short of raise of hands, who's heard of the concept of black swans? And I think it's a pretty common business term, right? Yeah. So that Nassim Taleb made it really famous with the book of that title. The thing about the black swan, people have interpreted that word to basically mean a really bad negative event, like a pandemic, 9/11, the '08 downturn, etc. The actual reference of it is actually something a lot more interesting. It's seeing something for the first time that you never knew existed, and then you can never forget that it exists. And the example was that in most of the world, all swans were white, but in Australia, they had black swans. So if you were a traveler, you got jump off the airplane, you saw one black swan, you forever knew that they came in the varietals of white and black, and you probably had your worldview shift. All you had to see was one. It was the unexpected nature of it. And so much of what we're in this world is a bunch of things we thought were unexpected happened. Here's an interesting one. This is where data can also, you're going to have to adjust, is a lot of people in the investment management world always had, primary and secondary markets and tertiary markets, common term, right? And the theory was primary was super safe, secondary less so, but a little hotter, maybe potential return, but higher risk. Well, a lot of people had portfolio models that basically said in almost every scenario of a downturn, which is what a lot of us economists model for companies is downturns and what happens to our portfolio, what happens to value at risk, all this. Everybody always assumed that New York and San Francisco were going to be far more stable and protected in a downturn than Phoenix and Tampa.
Yeah.
Guess what happened in this one? I've had talked to several institutional investors said, well, we can't ever put that into our models again that this will always happen because it didn't happen. Phoenix and Tampa greatly outperformed in office, apartment, everything over San Francisco and New York, certainly for calendar year 2020. And I'm going to guess probably 2021 and maybe 22, very likely. So that's like that reminded me of before '08, and those who were in the business ever heard like on the housing side, well, home prices never fall. That was a belief, and they had data. They had data that backed it up because they hadn't for a while.
Yeah.
Well, suddenly nobody, no matter what your data was, is going to put into their model. The home prices won't fall. Well, suddenly, if you're an investment manager, it doesn't mean that New York and San Francisco are going to fall apart forever. They're not. I mean, in fact, I think New York is doing pretty well. If you own apartments in New York, you're probably very happy. But
I think so.
But you can never write a model that says that these markets are going to outperform these other ones because you just lived through a part where they didn't.
Yeah.
Yet, if you were using data to do something like this, that's exactly what you'd have been led to conclude up until this moment.
Yeah. Yeah, some very fascinating things going on. And taking a look at just the market as a whole, what are your thoughts on the economy? We are saying a lot of different things, Numbers are pretty good, but there's some things that aren't so great either. What are your thoughts?
So I know the lights are bright, but I'm gonna still ask for show of hands. If you guys are engaged, put the phone down for 5 seconds and answer the question. Raise your hand if you would describe the economy today, and you can let it mean what you want. Raise your hand if you say the economy is good. I got one for sure, two. I got a 3, 4, 5, 6. I feel like I'm an auctioneer now. Raise your hand if you say it's bad. All right, so I got no takers on that. So you must either not be paying attention or everyone just doesn't want to. No one wants to admit it because then you're like,
there are bad aspects of the economy.
If you felt the economy is bad, you probably shouldn't be at a conference in Miami or something. Maybe that's the wrong expectation. The thing about it is that like there's a lot of personality in this question, and I think that if you looked at a lot of data, which we talked about the danger of this, objectively the economy is growing. In fact, I think what we are actually experiencing right now is we are experiencing the heavy growth pains of an economy that's trying to restart, trying to grow, and I think we've heard in all these AI discussions about, well, the motivation for AI is you don't have the people necessarily, right? Not replacing people, just that you're trying to fill jobs. I think the economy is good in the sense that it's growing. I mean, anybody who wants a job can get a job. That is probably a theme right now that has never been truer. But yet, if you're a company, if you're in the world, certainly we're in the, we deal a lot in development, so we have to worry about construction prices. The cost of inputs are scary. So margin compression is a real thing. So even though it's like everything I have will sell out, I don't have enough to sell. I feel bad for the car dealers or someone. I've never felt bad for car dealers, but I suddenly kind of feel bad because car prices go through the roof, but you can only make money on the cars you have to sell. So if you don't have the inventory to sell, you don't make any money, and you're actually doing worse. So this is an economy that is in so many ways. It's a very unique time. If you have good product, I mean, interestingly, in the development world, and I hope this isn't too self-serving being in the development world, I think that we've had so many shortages, especially in multifamily, but well before this. I mean, the data on, and this is easy data, how many people are alive and want to live places. Okay, that one's easy to figure out. How many places are there to live? And then you start doing the math and then you see the shortage. It's going to be painful to try to build and develop, and I think that you're going to see the cost factor. So, I mean, when I'm watching any of these presentations, and we don't operate, we usually sell fairly soon after operations start, but I'm thinking like, anything you can do to save pennies even might add up, because I mean, your margins are at risk, and almost everybody's margins are at risk right now. Yeah. And that's the danger. Even though it's a really from a high level growth, from like a really pure macroist economy thing, that's why there's such a disconnect in politics. Oh, well, this is all great. Look at this. Yeah, that's not the experience that people are actually having, right? Yeah. So I mean, that's the world we're in. Yeah, a few different perspectives to look at it. That's for sure. And part of all this is inflation. Turn on the news. You can't not hear inflation. What are your thoughts on inflation, Josh? So, I know today I guess I caught the news on my iPhone about the Powell's going, the Fed is going to slow down their buying of bonds, and they're looking at 3 interest rate increases next year. Look, that's a natural reaction. That's sort of the standard thing you expect. Nobody's going to deny there's inflation at this point, right? There's nobody, be it if you're putting gas into a vehicle, if God knows if you're renting an apartment, and this is like everyone's like cheer, maybe this is the one room that cheers that, but something about your personal, and if you're in a business and you're trying to hire people, certainly everyone, this whole thing about like the fight, remember like there was all this phrase about $15 minimum wages. Well, that kind of came and passed even in low income markets. 15 is like not even not even enough to attract people to come to work. So the question is, here's the bad news. Those prices aren't going to go back down. There'll be some commodity price like lumber that triple. I mean, there are certain commodities, even oil, that supply will, true supply gaps will fill into. But the general state of pricing, certainly with labor, it's not going to go backwards. So strictly the thing that we have to ask the question of is, when does the growth stop? When do we stop seeing inflation at 6%, which is a little bit of a misnomer because some of this is coming off of really low rates of things from the middle of 2020, if you remember. But I would just, if I were in our own company and we all need to just be planning for this stuff, hope that it gets better. But if you're building pro formas, if you're building your own operating budgets, do yourself the favor. If you're going to trend rents forward at all, then you better trend your expenses in line. And you would be malfeasant not to begin to plan for a world where we continue to see this growth factor and then potentially make decisions appropriately. I do not have any great news to tell you that it's done in January. Could it be? I guess. But unfortunately, I think the biggest thing is I think the things that would really tamp down inflation would be a recession. Like if Omicron, if suddenly people start caring about it, which they don't seem to right now, at least the people who probably come to a conference again, but that could stop. Yeah, I mean, if this thing were to resurge, that'll stop inflation pretty fast. Does anybody want that? No. But I mean, so you need to be planning for this and just accept the reality that I don't know if that means you install new AI systems. Maybe, right? I mean, you can take that one home and decide for yourself, but anybody who's got their head in the sand on this is going to probably be disappointed.
Yeah. A fun rapid fire question from the audience: Bitcoin or real estate? a big one.
All right, I'm going to do my show of hands first. Raise your hand if you own Bitcoin or other cryptos. Okay, I'm not going to ask about apartments because this is a multifamily room. I'm going to call it 20% with their hand raised. Some people are aggressive. Like this young gentleman here seems really excited about it. You raise your hand really fast. I have to fully admit, I really love the concept of blockchain cryptocurrencies. I cannot see it as an investment. My spider sense, like I've been spotting bubbles are something I've studied a lot. I mean, partially because I went through an economics program right in the midst of like the biggest asset bubble in 08 or 09, so kind of how do you not talk about it? People are trading Bitcoin and other cryptocurrencies like tech stocks, and they're not stocks; they're software code. And I feel like this is a really big thing, but we're all kind of I think the energy is in the wrong place. I'm interested in the blockchain companies and adaptation. Right? Let me have a question: is anybody who's a landlord? This is a serious question. Is anybody accepting rent payments in Bitcoin right now? I don't see a single hand. That's the problem right there. If all of you, if only a few of you raise your hand saying you're buying Bitcoin, and then all of you raise your hand saying you are going to accept Bitcoin in payment, then I'd tell you let's stop right now and go all buy Bitcoin. But that's not exactly what happened. The reverse of it happened. So I think a little bit. I look at this and look. This might be a statement I make that you can make fun of me. I could be totally wrong on this, but. I feel people investing in some of this. I feel like it's like asking me, do I want to go long on Windows 95? Those of you who are old enough to remember what Windows 95, how the was marketed, right? The answer is I don't. Now, do I think it's going to look? I think there's value to this, but I think that it's just it's an interesting thing. There's going to be a time when cryptocurrencies really, and certainly blockchain applications, are going to be very pervasive. I have no doubt about that. Whether or not it's this current inclination, I think we have a lot of iterations of growth. Real estate is a commodity, right? You asked, so the question is, if anybody, when people decide that they will, every once in a while I've heard enough metaverse jokes and stuff. Now, when you're ready to live in the metaverse, like you'll put on the helmet and just sleep out in a tent or something like this by choice, then I'd be worried about real estate. Until then, no, I think you can be. I don't know if anyone wants to. It could help the apartment if people really do spend a lot of time in this, which I'm afraid that certain people will. But yeah, that could be good for real estate, actually, for apartments in particular. Yeah.
Yeah. So for now, no Bitcoin for Josh Harris or Skanska.
That might be the worst decision of my life. I don't know.
Well, there are some people who are making it seem very appealing every once in a while. We all have that friend.
You know what gets
we all have that friend.
I have to be very honest. And I'm in Florida here saying this, so I feel like I'm coming home to say this. And by the way, 305 is my hometown. I was born in this city. A lot of the same people. This is like in my Facebook feed that have been promoting or been really into cryptocurrencies were some of the literal exact same people who were really big into buying condos and houses and flipping them back before '08. Like the same and that just, there's something about that just like gets me wondering.
For me, it makes me wonder, and then it makes me a little bit averse too, and it's interesting.
I might be wrong.
Yeah, it's interesting. Cap rates.
Ask me an easy question. Cap rate.
Yes.
Is that the question? Cap rates,
Josh. Can they keep falling?
All right. Anybody who raise your hand if anyone thinks cap rates is high. Let's see if I can catch anyone on this one. Yeah. No. Cap rates the big question is, can they fall or are they too low? Is I think one and the same question. So cap rate spreads are actually really wide. This goes back to a comparison to '08 that you cannot make. '08 cap rate spreads were like less than 100 basis points. And by spread, I mean the difference between the cap rate to like the 10-year treasury, something the relevant interest rate. They're really wide. They're several hundred basis points right now. They're wide by historical standards. Obviously, if interest rates were to if inflation were to flip into that really scary zone and all of a sudden the 10-year treasury is like 4% tomorrow, which I can't say, I think that's very unlikely, but no one can rationally say it's an impossibility. Well, yeah, cap rates are going to react pretty badly to that. But the thing about it is there's so much shortage in growth, and actually I think there's such a hunt for yield. Even in an inflation environment, I think, cap rates can actually fall. I think apartment cap rates that, they were at the 5 for a while, even in top tier markets, and then now they've been in the, probably on average in the 4s. Yeah. So many deals are trading now. Raise your hand if you're aware of or participated in a deal that closed with a 3 handle on the cap rate, like a 3.8, 3.7, 3 point whatever. Is anybody? You must not be in some of the market. Yeah. It's happening.
I see one.
I've seen some I've seen it. I know in Seattle. I think a lot of them. Now look, it depends on is that a 3 today at a 4 stabilized 4? Right? There's all these debates about which cap rate, but Hong Kong, Singapore, London. A lot of these markets have cap rates, and this has been going on for a very long time, that are effectively equivalent to what would be 2%. Very dense market. There's supply, demand, and growth, so it absolutely can go lower.
Wow.
It can. Is that a risk? The question then is, the question is, what's your alternative? Yeah. And if you want yield and you want some growth and maybe even, obviously some inflation and hedge yield, there's not a lot of options for this. You can go to Germany and buy maybe a 10-year bond and take a negative return. Yeah. Anybody would like that deal? I'll send me $100 million, and in 10 years I'll send you back 99. That's literally the game. Yeah.
Yeah.
So that's why cap rates can.
They can.
I say can. I'm not going to guarantee they will, but they certainly can.
Definitely can. Awesome. Well, I think we're just about out of time. So, Josh, thank you so much for joining. Really appreciate getting up with us. So thank you.
All right. Thanks so much.
Awesome.